Hey, welcome back, traders. It's time for a special video where I'll do a 2023 year in review, and we're going to go over some new ideas for 2024. It's December 27th, 2023. So this video is going to be longer than normal, but bear with me. Hopefully you'll feel the content is worthwhile. So again, remember that Rain King LLC is an amateur individual growth stock investor, and we're not affiliated with IBD or MarketSmith. So we're going to get into the year in review. Then we're going to talk about trading lessons throughout 2023. And then we'll get to the main attraction, which is I have 18 picks for 2024. Before we launch into that, I wanted to share one new idea, which I am looking for feedback. I am considering launching a Rain King website service in Q2 of 2024. And the focus of this service really is going to be education for traders with 1 to 10 years experience. And the idea is to provide more educational content to help speed up your trading education. And I'm fairly good at visualizing with diagrams and sketches, etc., to express trading concepts. And the idea was also to be affordable to everyone and have high quality content. So I'm going to get into this a little bit more detailed at the end of the video, but let's give you a quick little peek at what I'm considering. There'd be a whole bunch of educational courses. There'll be a whole entry level, there'll be an intermediate level of courses, and then of course I'll have my GMU extras, but then I'll also add stuff about buying and selling, how I buy and sell, how I add and hold, and how I place buy on strength, how I buy on pullbacks. And then there'll be an advanced section, which will get into what weekly watch lists. We'll talk about focus lists of specific setups, what we'll share on a weekly basis. And there'll be a level 3 of also additional educational content. We'll talk about the research component and some huddles. So I'll get into all this more at the end of the video, but I did wanted to give you a sneak peek of what I'm considering, and I'll share at the end how you can give me feedback. So let's dive into the 2023 year in review. Quite a year it was. And when you look at it, there really were 3 distinct periods over the course of the year. The first part of the year, going from the late 2022 into the first quarter of 2023, was really a situation where, believe it or not, the equal weighted Qs and the equal weighted S&P actually outperformed the Qs. You can see here when you run the comparison, the red lines are the equal weights versus the black is the Qs. So for November, December, January, and February, the outperformance was by the equal weights. Now, when we got into after the banking crisis in April, in the mid part of the year, from April till about September, we're dominated by the Qs. You can see here the black line is the Qs, clearly outperforming. The Magnificent Seven did their thing for the middle part of the year, and the underweight was in the underperformance was in the equal weights. Then we got to the last third of the year, from October to December. And again, what's happening, it appears, is if the equal weights are starting to catch up and actually start to outperform again. You can see here they were very tightly clustered, and the equal weights are starting to outperform the Qs, and some money is rotating out of the Qs. So an interesting year with outperformance in different areas. So when we look at the year, we started here at these lows, and we're going to finish somewhere over here. We had a very good year overall. So what was it all about? Well, we had the bear market low in October of 22, and we had this retest in December, a year ago, where we had some divergences with the new lows. And we'll talk about that further. But we had the very early part of the year, we had the Whaley breath thrust, and we had multiple follow-through days occurring in January where things looked very, very strong. And as I mentioned, the equal weights were outperforming. Then when we got towards February, into February and March, was the period where we had the regional banking crisis, and we had some 50-day breaks, really had some abnormal action in there, and things didn't look so great, and the Fed had to come in to support the regional banks. And then they had the Silicon Valley Bank failure in April, which was followed up not far after that was the First Republic failure. Things were shaky in here amidst that, but we emerged out of that. And again, we had the Magnificent Seven getting a whole lot of money put into them. The run started in late May. It started out fairly thin. You can see the new highs, new lows. They weren't impressive for the first month or so. And then as things got going, we had a little bit of improvement in breadth, some improvement in the new highs in June and July. So things started to peak out over the summer. We peaked around July 19th. And then shortly after that, in early August, is when we had Fitch downgrade the US debt as we were coming and pulling back in our first correction. And then a pretty pivotal earnings report over the summer in late August was the NVIDIA, which was really the star of the year up to this point. It actually sold off hard on its earnings report. And that was a clue that maybe things were changing a little bit and that this correction was actually going to go on a little longer. And we ended up having two more legs down. You can see here we had a thrust lower in September. And then, of course, from October to the end of October was the third leg down. But towards the end of the year, we got a follow-through day, which was very strong, and we had some real strong action. We had the powerful lockout rally for about 5-6 weeks, and then we had some very, very bullish digestion of gains and went sideways, and we actually started to see new highs do something we haven't seen in 2 years, where we had the largest number of new highs in 2 years. So a lot of breadth and a lot of improvement in the market, and many stocks were breaking out, as we've shown in previous videos. So it's been an interesting year, and it sets us up pretty well for 2024. So I want to cover some trading lessons. When I do these videos, I sprinkle some education and some lessons along the way. So I went back and culled out a lot of lessons. Now, the reason I do this is to make it easy for you. Those of you that have been following me all year, this will be a refresher of where you can find the lessons. Those of you who are maybe watching a video or two of mine first or second time, this is a chance to know where to go back into my YouTube archives, and you'll see the trading lessons that were covered. So here we are in early January. On January 6th, when we started, that's an important video. We talked a lot about bear market bottoms and the positive divergence that we saw in late December. So if you're interested in how to read the market, this is a great video to go watch. On January 16th, as the market really started to kick in gear with some follow-through days, the teaching moment was how to recognize change that's occurring in the market. And I put out some tweets at those times, some tweets about how we were looking at change, where we saw the divergence. So the interesting things here to go back and look at if you're interested in how the market was turning and seeing it in real time. Now, when we got to March, there's a couple of videos that I thought were fairly important in terms of teaching lessons. The March 2nd video got into what is the Whaley thrust update. And we also outlined how to evaluate a pullback in the market to determine if it was normal or abnormal action. And on March 12th, we actually evaluated the pullback that we were seeing. So if you're interested in how the market evolved in March, there's some good videos here to learn from. Then in April, I introduced a new concept. I introduced the GMU Extra segment, which is a small 10 to 15 minute video about a specific component of trading. And I started off using one on institutional accumulation and distribution, which actually turns out to be one of the most popular ones that people really enjoyed. And so I sprinkled these GMU extras out in the second half of the year. So this is a particularly good one that you might want to go view on April 24th. As the market was still looking fairly shaky in April 28th, I put out a tweet that really talked about some of the positioning of institutions and that things could actually change quickly. And then we looked at those early signs of trend change in this video, so that may be a good one to look at on April 28th. Then on June 23rd, we had a couple of interesting videos. I go over the secular bull market thesis. This is the multi-year bull market thesis. I go into in great detail of how it could play out over the next 10 to 12 years. So that's a good video to set some large big picture context of the market. Then in July, as the market was peaking, July 28th video had some good teaching moments again about a pullback and how to evaluate that pullback of the market to see if it was acting normally or abnormally. So there's some great content in that video. On August 4th, we also put some teaching moments in there about how to use market indicators to read the market and how do we monitor the leading stocks. So there's some interesting things I shared on how to stay on top of the market. There was a tweet I put out that was really important. I think this was in late July. And this particular day here was a very bad reversal day, which I tweeted. I thought that this really was the signal that the market was not going to have a short pullback, that we could go deeper. And that is how it did play out. Again, more cracks in the market were showing up. We saw new lows picking up. And so there's some interesting things to look at in these videos. So as we entered the fall, we really started to hit home in late August with trying to set people up to understand what might constitute a change of trend. What were the criteria that we're looking for as we're observing the market and trying to understand when things might turn. November 3rd was a pretty important teaching moment. I thought this video covered how the breadth of the market underneath the surface was really starting to improve. Before we even had the follow-through day. So it was important to understand the sentiment was on one side, and then we got our follow-through day. So there's some good nuggets in there if you're looking to learn. On November 24th, I got into what is a lockout rally, how did the trend monitor look at that time, and how we should be getting more exposure to the market. And then as we got into December and the rally was really off and running, I did a teaching moment on how do you handle bear market losers, stocks that you may have been trapped in the bear market, and some options for dealing with those. And those at December 8th, we got into that. So lots of good stuff here. And this is almost like an index. You can go back and review some of these videos and hopefully get some more education. So let's get to the main attraction. This is really Rain King's 2024 ideas. So I did this last year, and I shared how I finished, which was pretty decently last year. Even though I had a couple of duds, I had some real big winners with some triple-digit gainers. The idea here is that I'm making these kind of picks. I have to hold the picks for a year, and I can't make any changes. So it's pretty tough when you're trying to pick where a stock might be 1 year in advance, let alone, it's hard to pick where they'll be in a month. So in doing this analysis, I'm looking for fundamentals, I'm looking at technicals, and I'm looking for themes in the market and what might play out in 2024. It looks like inflation has peaked, interest rates have peaked, and it looks like rates will come down at some point in 2024. I know there's a lot of people that are saying it's going to happen in the first half of 2024. I personally think it might not happen until the second half of 2024. But regardless, it doesn't matter because opinions don't mean anything in the market. What really matters is watching the market's action and reading it properly. So I've got different groupings for these picks. I've got 3 names that are really of situations that falling rates might help these companies. So that's something we'll look at with these 3 names. Then I'm going to go over some liquid glamours, and I'll explain what that is when we get to it. I've got 3 names in that category. And then the core is small and mid-cap growth stocks. That's where I tend to play, and we'll look at some names that are new merchandise, new IPOs, recent IPOs in the last couple of years, which tend to emerge out of in a new bull market. And then I've got 4 names that are much more speculative, and some of them are turnaround stories that may be of interest. So let's go into this first category, which is really cyclical names and falling rates. So the first pick I've made is United Rentals. This is a company that rents industrial equipment. And it's a very well-managed company. You can see here that they've had strong earnings growth for numerous years in a row, solid return on equity of 35%. This company is the market share leader in rental and leasing equipment in the construction industries, as well as in building of factories. So U.S. factory construction grew by 70% in terms of rentals for this company. And they really attributed it to the EV factories that are being built, the microchip factories, and battery factories that are being constructed. So there's demand there. It's part of the theme of EV. The new infrastructure bill Has a lot of money in it that's going to go into factories and data centers, which should be good for this company as a cyclical company. So what I like about it is the stock had a basing period here for most of the year, and the second base tightened up, and we've emerged to break out, and we've broken out to all-time highs, which is clear sailing above if the stock can get going. So I like this company. But even if we get a soft landing situation, this could really be a cyclical name that'll do well and hopefully surprise to the upside. You can see very solid earnings and sales for a cyclical company that's been growing well. So that's my first pick. The second pick is Blackstone, symbol BX. This is a financial company. They have a $1 trillion asset base. I like this company in a falling rate environment. I like it. They also have the mix of their assets. 75% of their assets are fee-based. So they have regular income. The outlook for this company is really strong on the earnings front. You can see here 66 and 35%. And easing of monetary conditions could see inflows into Blackstone pick up. So I think this is something that's a really interesting in the environment that we're in. It's really brokers and dealers and finance investment managers do well in a bull market. So it's really a bull market name here. They tend to do well. And the XBD ETF is also showing it's very close to new highs. Now, on the technical side, this company, again, has formed a base. It's broken out. It's been showing really big blue spikes over the last 6 months. And the recent breakout looked pretty good. RS line is at 93. You can see strong earnings and sales the last 2 quarters. I think that's going to pick up as we move into 2024. So that's my second pick. The next pick is in the housing sector. The home builders have been doing really well as of late. And as you can imagine, in a falling rate environment, it could really boost home sales as interest rates come down. So Toll Brothers in particular, they focus on the higher end of the single family home market. They focus a lot on people moving up to the higher end of their house market. Now, the rear view mirror on this company looks poor. You can see the very spotty earnings and sales down here. You can see even the projections look a little spotty. They don't look like there's much growth. But clearly, mutual funds think better times are ahead for the company. You can see here that the mutual funds have increased for 3 quarters in a row. So people are taking positions, which are showing up in these blue spikes. And the stock had broken out, and it's at all-time highs. And again, all home builders have been really showing a lot of good RS lines at new highs as well. Pulte and DH Horton, all doing well. It was very tough to pick one of these builders. Last year, I picked DH Horton. I think that had a very good year, was up almost 70%. This year, I'm going to take Toll. So let's get into the next category of my ideas, and this is called liquid glamours. So first of all, I'll start with what is a liquid glamour? A liquid glamour is a stock that is of a scale that is really, really attractive to institutions. And what I mean by that, attractive to institutions, is if an institution is looking for a growth company, they love to see companies, big companies, that are growing their earnings at 20, 30, 40% per year, particularly over 30. Their sales are growing by maybe over 30%, and they have some stability in those earnings. So they really like to see that. And institutional quality, meaning the average daily trading volume of these companies is at least $100 million. Many times it's close to $500 to $1 billion every day. So they're very, very liquid, which allows multiple mutual funds and institutions to really put big positions on. And they're very liquid. They can get in and out and support those stocks. So it's very rare to find big companies with 30% earnings and sales growth. So that's the lead in to my first pick in this group. My first liquid glamour is CrowdStrike. Now, this is in the cybersecurity group, which has been probably the leading group in this rally, this lockout rally. And Crowd is actually the #1 name in the group. So it's very strong. It's all on this security theme. We're talking about stocks that, we've got wars in multiple parts of the world. AI is rolling out, and we got a remote workforce. Security is very much top of mind. As I mentioned, this qualifies as a liquid glamour. Sales and earnings growth are above 35%. You can see here that the earnings stability is very good. A 21 earnings stability number, the lower the number to one, the stronger and stabler those earnings are. So this is a company that has been very, very consistent over the last 3 years. It's very liquid. Over 765 million is the average daily dollar volume. Record sales the past 8 quarters. These are very rare numbers that you see this kind of growth in a company that's $61 billion of valuation. Also, a very strong ROE of 30%. Bill used to always look for at least 70%. The forecasts are strong. 2024 has a growth of 92% and another 26% in 2025. And their sales during the bear market, believe it or not, were record sales. So this company has a lot of things going for it on the fundamental front. On the technical front, you can see here that during that correction of 3 legs down, CrowdStrike formed an ascending base. It's a rare structure, but when it broke out of that ascending base and the volume really kicked in, you can see CrowdStrike was up, I believe, 7 or 8 weeks in a row. It's approaching all-time highs, so it might pause for a while before it can get over the wall over 300, but I think it's a possibility. It had superior relative strength during that market correction. Just look at this in yellow. The market's coming down in 3 waves. The relative strength of this strong was showing you that it could be the leader. I believe this is one of the leaders of the market currently, and I will disclose that I already have a position in CrowdStrike. Let's go to the next one. This is Shopify. This is another company that I think is a liquid leader and a liquid glamour. It's a leading e-commerce platform for small and mid-sized businesses. It has been adding a lot of new tools to attract businesses. They have business-to-business compliance software now. They're automating billing tools for companies, and they're actually helping young companies with local currency exchange. They just formed a new partnership with Amazon. For many years, Shopify was trying to build their own distribution to compete with Amazon, but they have now decided to abandon that strategy and partner with Amazon, which should be good for the company. So liquid glamour, you can see sales and earnings growth are above 25%. Very liquid for institutional positions. Trades almost $1 billion a day, and it's the leader in its space. And now it's really interesting to see Shopify had a very, very harsh past year, and it's really a turnaround situation. But what's interesting is the turnaround is showing us right now that the evidence is the turnaround is real. They're showing you actually on the table sales increasing as well as earnings. And the forecast for next year is over 1,000% on the earnings front and continuing with almost 50% more in 2024. So this is a turnaround situation. Now, the base that it's built on the technical side is interesting. It built this double bottom base during the correction that we had. And you'll notice that in the base, there is accumulation in this base in terms of, see some of the blue spikes here. Now, you'll notice there were big blue spikes occurring back in March and June. And when you notice, when you go back to some of the mutual fund reports, JP Morgan has acquired over 3.5 million shares of this company over the summer, and the Fidelity Contra Fund has bought over 1 million shares over the summer. So they're buying these shares. They were anticipating this company was going to turn around, which is now showing it is turning around. And you notice that the ranges of the company have become much smaller, much more steady accumulation happening as we've broken out of this base. So I think this is a good situation and there's room to run. It's one of my liquid glamours for 2024. My next liquid glamour is Snowflake. This is a big data play, and it's really driven by the AI theme. They data warehouse companies' data, and they have generative AI applications that they offer to help their companies generate applications using AI for companies' benefit. So it's an important one. I think it's also got a lot of different things going on for it. Its client base has been increasing steadily, and they've actually had clients that spend over $1 million a year has grown over 50%. They have 432 clients that spend over $1 million. And the forecasts are showing 30% sales growth to 2029. You can see here 41% earnings growth, very good forecast. They've now finally reached really profitability at scale. You can see their earnings are triple digit. So this particular combination of strong sales growth is what institutions are really looking for if they're going to put a lot of money. They have almost $1 billion in average daily trading volume. So there's a lot of things to like here again with Snowflake. You'll notice on the technical side, what's interesting is you can see this wide and loose, sloppy price action, long base formed for almost 18 months. But this last cut base, you can see the big blue spikes are really showing you that the elephants, these big institutions, are taking positions. And you'll notice that the price ranges have gotten much more steady, and we're getting many more closes for the week near the peak. That's a good sign of accumulation. Very different action than we saw in this sloppy period here. It's just emerging out of a base. It has been lacking a little bit in this rally, but we'll have to see how we can do. But this is my liquid Glamour pick, the third one. Now we're going to move on to small and mid-cap growth. So these companies are a little bit more young, and maybe some of them not even known by you. The first one is the Affirm Holdings. This is a payments theme company. You know, they're one of the leaders in the buy now and pay later space. And this concept's really fairly new the last 3 years. And Affirm has 30% market share. They have a very innovative CEO leading the company. He was a chief technology officer at PayPal. He was the CEO of Slide. He was the chairman at Yelp at one point. So he knows what it takes to take a public company and make it successful. What's interesting about on the fundamental side for Affirm is it has machine learning that they use to determine the credit worthiness of potential customers, which helps the merchants with credit worthiness. Now, they do have competition from Square, who runs Afterpay, and multiple banks have their own credit cards that can also implement programs similar to Affirm with its buy now, pay later. But Affirm seems to be the leader in the space. They have partnerships with Walmart, Amazon, and Target. These are big, big retailers. What part of the strategy at Affirm is they want to help merchants avoid constant discounting of items. And merchants can avoid discounting if they allow customers to buy now and pay later. They also have a card called the Affirm card that gives the customers various payment options. There's no late fees, very attractive to people. And they are also growing. They're targeting growth in the UK next year, and they're actively working with multiple partners, which could bring some more upside if deals get announced. Now, I think the one risk is really copycats down the road. I mentioned Square has Afterpay. Banks and credit cards might get into this space. So that could be a problem down the road. But you can see there's a very strong, profitable forecast for next year's earnings. They're showing the accumulation rating of 2.1, which is very strong. Anything above 1 is showing accumulation. We're seeing mutual funds show some renewed interest in the company. There's accelerating sales. Now, on the technical side, this is very interesting situation. You can see here, it's hard to miss. Look at the blue spikes in this company over the past 6 months. This is institutional buying. You can see these, they stare out very, very obviously. You can see that a small cut base was formed, and this stock has been a rocket ship. It's up 8 weeks in a row, weekly in a row. It's up over 100% from the base pivot. It's a very, very powerful situation and rare. This is possible. This could be the pole of a high tide flag. If this stock were to consolidate and pull in and correct maybe 15 to 20%, that could form the flag. Very powerful situation. Stock has momentum. So I think this is one that I think will do well in 2024. Next one is Elastic, symbol ESTC. Again, this is an AI play. Some people refer to Elastic as the Google of big data. They have software that will ingest massive amounts of data from any source. And they can take all these sources, whether it's text, pictures, computer programs, formulas, etc., and they can make it searchable for teams to find actionable insights. So their offerings are almost tailor-made for AI. Clients can use the tools that Elastic offers to build their own AI applications, and they can build their own large language models. So this looks like it's a young company, but it has some potential. And what also we noticed on the technical side, it had a huge earnings gap up back here where it blasted out of a large cup with handle. You can see this large cup with handle broke out on an earnings gap up, and it's been digesting this for the past 3-4 weeks and very, very strong. It's holding very, very well. And again, just look at the change in the character of the stock. Look at all this wide and loose price ranges. And if I just drew a line halfway through this cup with handle base, you can see that the right side of the base, the ranges have tightened up dramatically as institutions are starting to take positions, resulting in some of these big blue spikes. It's not too far away. It could get up to new highs this year, so I think it's got some real potential, and it's been profitable. The last 5 quarters, you can see here, during a bear market, triple-digit earnings. So good forecast for this company as well, tailor-made for AI, so I think it has some real potential in 2024. The next company is Samsara, symbol IoT. This one's been a tough one. I personally tried to trade this stock multiple times, I think 3 times, and 3 times had losses. But putting that aside, I still think the company is very, very strong young company. It has a software platform which is geared around AI to track clients' physical assets. So if you think about it, any client that has an inventory of vehicles are using telematics and equipment monitoring. So you can think about rental cars, you can think about equipment makers, all of these companies have lots of vehicles, trucking companies, they have large inventories that they want to monitor. So the whole premise is IoT has systems to help them monitor the data, boost their efficiencies, and lower their costs. They have contracts with construction companies, waste management companies, grocery companies, and airlines have all become early clients of Samsara. They have over 6 trillion, and I did say trillion data points. There's a huge barrier to entry with the data that Samsara has compiled. Now, this company has a very rich valuation. The PE is 425. I wouldn't discourage that from putting it on a buy list because I don't really use PEs, but it is priced pretty much to perfection. It's been a frustrating stock. You can see technically it's had breakout and failures multiple times. Here's a base that failed over the summer. Then it had a double bottom base where it really looked like it was going to go, but we were in the middle of a correction. So it failed and it formed another cut base, which is broken out. And we're sitting right at all-time highs with some tight action in here. So some big blue spikes give us conviction that maybe the big institutions are taking positions. The funds have risen from 197 up to 334. That's still pretty low number of funds. I usually like to see at least 400, but the good news is they're rising. So definitely institutions are becoming aware of the stock and taking some positions. The sequential sales growth is impressive. To be growing sequentially 10% every quarter is a very, very strong metric. And you can see next year looks to be a profitable year on the earnings front. So lots of things to like about Samsara, but I have to say it has been a frustrating stock at times. It can be a little whippy and chops around because it's so young still. So it's one to maybe have on a watch list that might be of interest. The next is Axcelis, symbol ACLS. This is a semiconductor equipment company that's on my list. This is a company that has a very unique niche. They have a unique Purion ion implant chip equipment system, which is really geared towards making silicon carbide chips. And silicon carbide chips are really the future of semiconductors. This market for silicon carbide chips is expected to double every 3 years, at least through 2027. It's been a little slow to get started with Wolfspeed and some other chip manufacturers, but this company is positioned well, and it could be growth for this company in 2024. They serve some really interesting markets. They're in the EV space. Driver assist is where their chips are showing up, artificial intelligence, 5G, and Internet of Things. So they're in the right themes in the market with this trend of silicon carbide chips that will be growing in the next few years. The forecasts are pretty good next year. Good ROE, 30. You can see solid earnings and sales. Now, the stock sold off in the second half of the year. So technically, it's come all the way back down, and it's actually sitting right on top of this last base area. So it's kind of a bottoming process right on top of the previous base. A lot of distribution occurred in the stock over the summer with these big red spikes. But the pick is being made anticipating a turnaround here with this big blue spike where maybe we've reached a bottom and this starts to come up the right side of a new base. The share float on this particular company is rather small. It's only 32 million shares, so it can move quickly if institutions want to take a position. So this one's a little bit of a gamble. We're gambling that we've bottomed in this stock, and the semiconductor space starts to pay more attention to the future of silicon carbide. So this is my semiconductor pick. My next pick is a company called Light and Wonder, symbol LNW. This is a leisure gaming group company. Now this, for those of you that can go back a ways, this is the former company. It used to be called Scientific Games. Now Scientific Game was really into lottery games, but they've really built their platform as a leading cross-platform of immersive gaming. And they've gotten their business broken up into various components. They are certainly do gaming machines like slot machines, et cetera, and parts. But they also have a growing segment called iGaming, which is online casino betting and lottery system games, and mobile gaming, which they call in the segment called SciPlay, mobile gaming. The November earnings report surprised on the top and bottom line, led by these two new groups really starting to take off. So the forecast is very good next year on the earnings front, 137%. You'll notice that the forward PE is only 25 on this company, and it's been showing record sales and record earnings the last 3 quarters. The downside is leisure and gaming is a weak group. It's number 152 in the rankings, which is not a very strong ranking. But on the technical side, it's formed a very long base, and it's approaching all-time highs. So it's kind of a slow mover, steady. I'm anticipating that maybe if this stock can break out, maybe we can get a move out of it this year. Usually after a long base, they say after a long base, the higher in space. So this one is a little bit more on the risky side. It's not a strong group, but I do think the theme of gambling, casino gambling and mobile gaming gambling is one that is going to grow even more in 2024. So that's Light and Wonder. Next name is GitLab, symbol GTLB. This is a software company that's sitting in one of the top 50 groups. It's number 48. It's in the tech services computer group. And what they do is they have software for what they call development operations, DevOps. So the software that they have helps in-house software teams develop new software, test that software, and distribute that software to their team internally and to their external customers. This process of using GitLab's tools is 7 times faster than developing the software only with your in-house team. And it's catching on. The Fortune 100, almost 50% of the Fortune 100 are customers of GitLab. And now we're in a world that has revenue generating apps. These tools can save time and leverage people. So this company is young, but it has some real potential. It came out probably at the worst time at the market top in November of 2021 and got beaten down in the bear market. But it's had a prior uptrend and formed a base, and we've recently broken out. You can see here the breakout was on very stout volume, twin towers here in blue. And you can see the forecast is good for earnings, is good. The mutual funds are still small, but they're rising. You can see steadily funds are entering the stock, and the company has just reached profitability the last 2 quarters. So there seems to be some runway for this company. Has quite a bit of runway to get back to the old highs. If it were to do that, to get from 60 to 120 would be a double. I think this is in the right space as software. The speed of developing software is a strong theme as people develop new revenue generating apps and AI apps. So that's GitLab. My next company in this category of small and mid cap growth is Monday.com. This is a cloud-based project management software company. The group has been rising. Software enterprise is getting stronger. It's gone from number 78 about 3 months ago up to number 47. Now, Monday offers highly customizable tools and applications for our teams to use to manage projects. And they also have a specific tool called an AI Builder solution, which is getting some traction. They recently raised guidance for Q4, and they've cited their growth plans are really on track, despite some of the war activities that are going on in Israel, because this is an Israel-based company. So they've really calmed the concern that the war activities might hurt the company. Now, some interesting things that are important. The forecasts are good on the earnings front for next year. You'll notice the big increase in funds the past 3 quarters, and 2 of the really, really successful growth funds, TR Rowe New Horizons Fund and Lord Abbett, are actually taking positions in Monday.com. And the sequential sales growth the last 3 quarters is impressive, along with the earnings surprise. Now, the sales surprise, the top line have been surprising by 5% and 4% and 4%. Earnings surprises the last 3 quarters are triple digits the last 3 quarters. So the company's doing a lot right. Now, if we look at the technical chart, we can see that it came off the bottoms, formed a base, but then got washed down with the corrective 3 waves down we had in the market. Stocks come back strong. Lots of blue spikes. That's these mutual funds taking positions in the stock, which has been going on for much of 2023. We've broken out of the base. A little bit of a concern is the relative strength line has not yet confirmed the breakout. So that's a little bit of a cautionary sign that the stock is actually lagging the market in this current rally. But again, I'm trying to look out, where will this company be 12 months from now? And I think it will be much higher. So my pick is Monday.com, symbol MNDY. My next pick is one that was on last year's list. This is Shift for Payments, another payment processor play. Symbol is FOUR. They have a robust suite of payment application solutions. They deal in the credit and debit payment solutions, mobile pay, Apple Pay, Google Pay, all kinds of web commerce. Now, the company's specialty has always been the payment processor in the retail, hospitality, and restaurants. That's their bread and butter. But they've been making acquisitions over the past couple of years to start to really diversify and grow the company. And they just completed a company they bought called Finaro, which is actually a global cross-border payment provider of over 10,000 restaurants over in Europe. They've also acquired a company called VenueNext, which is point-of-sale solutions for big arenas, college stadiums, casinos, pro arenas. They signed deals with the Dolphins and the 49ers this year. So they're getting into big arena point of sale. And the real differentiation with Shift for Payments is their end-to-end platform for all of these omnibus channels, and they're doing all that at a lower cost. So it's a pretty attractive proposition. Bull markets tend to see 1 or 2 of the payment processors do really, really well. I mentioned a firm earlier as the other one I think has some good runway ahead of it. So you can see that 4 has been profitable even during a bear market. The return on equity is very strong at 34%. And you can see solid earnings and sales with 3 quarters, believe it or not, of earnings surprises. So it's a strong company that really got caught up in the small cap washout. You can see the chart here when we had the small caps and the IWM really get washed down in the fall. Four got caught up in that and really sold off hard. But in Q4, it looks like funds are re-engaging with the company. We're seeing they're up to 517 funds and some big blue spikes. This is a stage two consolidation. Some of the negatives, though, it's really deep. It's a 44% deep base, which is kind of deep and flawed. I do like the fact that these up weeks are all on peak closes, so that's positive. It may need to go sideways and form a consolidation here because this is a pretty strong move. So we may need to digest, but I do think there's runway ahead for this company. Also note, has a very small float, only 55 million shares. That can make this stock trade a little more volatile and jumpy. The spreads on the trading, the buy and ask, the bid and ask can be wider than normal. So I just give you some caution. It's a young stock and it can be pretty volatile. So let's move into the next category, which is our final category. That's looking at speculative names and turnaround. So my first turnaround story is Las Vegas Sands, symbols LVS. This is a turnaround situation. The casinos are still trying to really recover from the COVID bear market, some of the COVID devastation. The turnaround, though, is in motion. You can see here that earnings and sales are on the table. And I like that to say, this is not just somebody talking about a turnaround, they're actually doing it. You can see triple-digit sales, triple-digit earnings the last couple of quarters. And they're showing 2024 as a 51% earnings growth. So I like to see that. The group is still pretty weak. It's 152 in the gaming industry, but it has moved up from 176 where it was 3 months ago, and I believe it's now at 147. So there's evidence of a turnaround. The PE is very, very low, the forward PE. So there's very, very low expectation for this particular company, which could bring some upside. When we look at the chart, again, the chart came up the right side of this big, large cup formation, and it really stalled out at the old March 2021 highs here, which I've shown that line in red. And the stock couldn't get above that, and it got dragged down in the second half of 2023. Now, it's interesting that this bottoming process that seems to be started, what I like about it is we saw two blue up weeks start to form the bottom here with some spikes, but they were followed by some light volume weeks after that. You'll notice in here the volume started to really dry up, which was showing that maybe the sellers were getting exhausted. Then we had this 1 week here, which there was some more selling, but it was absorbed. We had this high volume week, which we got support, closed approximately 50% in the range as we retested these lows. So possibly this low has been put in the stock. The bottoming process might be in as we form this little bottom, which is kind of sitting on this prior cup formation. So I'm anticipating that maybe this stock can have a move up the right side and be a performer in 2023. That's my first turnaround. The next one is Carnival Cruise Lines, symbol CCL. Again, this is a recovery from some of the demands of travel that were stunted during COVID. There's a lot of demand to travel, whether it be by air or by cruise ship. So the travel and booking names, if you've been following the groups, have really started to perk up kind of subtly over the last month. And things like Expedia and Booking and Airbnb and Hilton, these names are starting to perk up a little bit, even though the group is still fairly weak. They're showing a major earnings turnaround the next couple years. There's lots of signs of accumulation. The funds are picking up. It's got an accumulation distribution rating of A, which is strong, and the up-down volume is 2.0. And as I mentioned, anything above a 1 is showing accumulation. The summer revenue was also very, very strong here. You can see the sequential revenue, very strong. And on the charts, we can see, what I like about the chart is we had a solid prior uptrend of 30%, and then we formed this stage 2 cup base. And we're showing some blue accumulation on the right side. And I like the fact that we're seeing peak closes on multiple weeks on the right side. So hopefully the stock can finish the base. Maybe it forms a handle, but I think there's upside in this company. You'll notice that, again, the expectations are fairly low for the gaming companies and these leisure service companies, but most bull markets usually have one or two leisure stocks that do well. So possibly Carnival might be one of the ones that can perform. My next speculative stock is really not a stock, it's an ETF. I picked Nugget, N-U-G-T, as the symbol. This is the gold miners, the 2X bull ETF. So the premise here is as inflation comes down and interest rates come down, gold could rise. Now, this stock has been in a long bottoming process on the chart, long bottoming process. And gold bullion, if you look at gold itself, it is near all-time highs from itself being in a long base consolidation. If gold can break out to new highs, that could really benefit the miners. And with the leverage, this stock, or excuse me, this ETF may have some ability to perform. Maybe it's bottomed out here. So it's a very speculative play. Be aware that ETFs, particularly leveraged ETFs, are very risky. And this is not for everyone, but it's something that I think if you're a speculator and you control your risk, this might be something that could perform in 2024. Next one's a biomed, biotech stock. You know, I generally don't play biotech stocks, but the biotechs as an industry group has been really starting to outperform. So I felt compelled to pick one biotech stock. So this one is, again, more speculative, but I picked one that is fairly stable in that it's a real company with real product. This is a biotech name you can see with real earnings last 3 years with good growth forecast in 2024. It's got a strong ROE at 22. And the group, as I mentioned, biotech has moved up from 62 3 months ago up to number 28. So the group is performing. It's in the right group. Now, Neocrine makes drugs for rare and under-addressed diseases. It's probably most popular for its flagship Ingrezza drug. Now, the FDA has just accepted their application to make Ingrezza in a oral form. So that's getting a lot of buzz and some stimulation to the stock. Another drug that they have in phase 3 trials hit their targets. That's also exciting the street. They're getting excited about the company. You can see some blue spikes in the chart. Big cup with handle here that broke out. It's up 4 or 5 weeks in a row. So it's all biotechs have some risk to them. But I picked one here that is, again, a company that has real product. They have real earnings and sales, and maybe it can be a performer in 2024. So there you have it. That's 18 ideas with a 1-year time frame. And there they are. These are the prices. I've used the prices as of the close on December 22nd. That's what all the weekly charts are showing. I also included as a bonus some honorable mentions. It's really tough to limit your picks to these only 18 names. So in each category, some other names you might want to check out. I pick out Martin Marietta as a cyclical name, TLT as long-term bonds. The liquid glamour category, Uber and Booking were a couple of names I thought were really interesting. Honorable mentions in the growth category were Confluent, Expedia, ARM Holdings, Semiconductor, and as well as Coin. And in the speculative category, for those that want to venture out, there's a couple of biotech names, IMGN, AMPH, BHVN. And I also included Mobileye, which has been an IPO that really hasn't performed yet, but it makes driver assist systems that maybe get some traction in 2024. So that's the list for this year. So coming back to try to wrap up, I want to talk a little bit more about this potential website. As I mentioned, I want to focus this on education for traders with 1 to 10 years experience. The whole idea is to accelerate your education, use visualization and trading concepts to help you understand and improve your trading faster. I want to provide high quality content, which I strive for all the time, and I want to make it affordable. The idea is the level 1 would be 30 to 60-minute videos on every one of these topics if you're an entry level or somebody only trading 1 or 2, 3 years. Intermediate will be 30 to 60-minute sessions on all of these different topics. for as you develop from level 1 to level 2. GMU extras, some of these I've put out, probably half of them, but I've got a whole another half dozen of them that nobody's seen before. So lots of quick hitting 10, 15-minute videos on GMU extras. And then I'm going to get into my particular buying and selling. How do I buy on strength? What techniques do I use to buying on pullbacks? I'll share my B&B pullback, my 10-week pullback, buy strategies. I'll get into how do you hold, how do you add to stocks without increasing your risk. And then we'll cover a lot of different sell rules and different ways that I use to sell. So there'll be a lot of content here. These are easily over, hours and hours of content that'll be provided. And in addition to that, I'm going to take it to the next level, sharing watch lists on a weekly basis. Then I'll share a focus list of actionable setups. I'll do a weekly video. I'll review those setups in detail of how you could buy, how you could place your stops, and also a little bit how I screen for winning stocks. Then there'll be an advanced module of education where there'd be probably 30 to 60 minutes on each of these different topics to get into some more advanced concepts. And then I plan to I have a great a vault almost of research. I've done many studies on model books over the years, including the GAP course, market cycle data, and I'm planning to offer a quarterly Zoom meeting, and I'll pick some topic within the research that I've done as education and training. So we'll do quarterly Zoom meetings on that. And a nice bonus is I have all of the Blue Sky recordings from the first Blue Sky in 2018 to the most recent one. And if you join the service, you'll get access to all the Blue Sky recordings if you've missed them or not. And then I'm considering doing coaching huddles. These would be very specific educational topics, trading topics that we'll have in small groups of 6 to 12 people. And we will make them very interactive, where you can ask questions, we'll talk about the topic, and really try to focus on specific things that people are trying to improve upon to accelerate your learning. And then I'm experimenting a little bit with some one-on-one coaching that some of the people might be interested in. That would be coaching that's customized, particularly to some area of trading that you're trying to improve. Now, there'll probably be 2 tiers to the service. There'll be a basic subscription level, then a premium subscription level, and there'll be a price range of somewhere affordable, which I think is very affordable, at $20 to $30 per month. So I really want some feedback. I want feedback from you, if you can give it to me, about the proposed content. Does the content resonate with you? What do you like? What do you not like? What content would you like to see in such a service? And I'll see if it's something I can incorporate. And I also would like to get your reaction to the price range. $20 to $30 a month, I think can reach most people as being, quote, affordable. And I like to put out great content to really make it a good value. So please comment on the price range. Even if you have no interest in joining such a service, that's okay. There's no commitment. I'm just trying to get feedback to put together a product with a website that really resonates for people. So please email me at RainKingBullBear. Give me the positive, give me your negatives. I want to try and make it a service that really is helpful to people. So I know it was a long video, but that was the 2023 year in review and 18 ideas for 2024. I want to wish everybody a happy New Year's, and I hope it's a safe New Year's, and we can all be very, very prosperous in 2024. Here's where you can find me on my YouTube channel, on X, and again, here is my email to give me some feedback. It's been great working with everybody the past 2 years. I love doing this final review, and we'll see you all at the first GMU update on January the 5th.